It's time now for business, and for that I'm joined in the studio by Stephen Carroll. Hi, Stephen.
Hi, Hagsy.
We're starting with a ship, a rather large ship that's blocked one of the world's most important shipping lanes in the Suez Canal.
Yeah, that's right. It's one of the biggest container ships in the world, in fact, the MV Ever Given, and it's run aground in a narrow stretch of the Suez Canal in Egypt. The 400-metre-long vessel turned sideways and has blocked all traffic through the canal since early on Tuesday morning. It was on its way from China to the Netherlands. This is the photo taken from one of the other ships now stuck in the canal by the Instagram user Fallen Heart 17. The crew are all said to be safe on board that Evergreen vessel. Apparently it got stuck after being hit by high winds, but none of the containers have sunk, according to the operator of the ship. You can see on this map from the website Marine Traffic where exactly it has been stuck. Those vessels you can see around it on that zoom in on the map are the tugboats that are trying to currently free the vessels. It's caused a massive blockage. There are dozens of ships, both north and south, now unable to travel through the Suez Canal as a result of this.
So just how serious is this disruption set to be?
Potentially very major. This is the most important shipping route for goods between Asia and Europe. So it's a pretty major blockage to have to deal with. It could be days as well before this ship is freed. Past blockages have been resolved quicker, but simply the size of this ship, this 400-metre long vessel, is going to make it much more difficult to move it. Now, last month alone, more than 1,500 vessels went through the Suez Canal. In an average year, almost 19,000 travelled through it. And that's around 1.2 billion net tonnes of cargo, around 10% of the world's shipping trade, 10% of the world's oil shipments as well that pass through it. The shipping industry has already been under huge pressure because of the COVID-19 crisis. They've had difficulties getting in and out of ports because of COVID restrictions. They've had difficulties getting crews replaced on ships because of restrictions. This is just another problem to add to this really crucial industry that affects us all.
Well, to the United States next, and talk of tax rises to pay for President Biden's new spending plan.
Treasury Secretary Janet Yellen says that more taxes will be needed to pay for the White House's $3 trillion investment plan. That's the next stage of President Biden's economic agenda. Janet Yellen defending the need to tax increases, but said the administration wouldn't do anything to hurt small businesses or people on lower incomes. She says there's been a global race to the bottom in corporate taxation and that they hoped to put an end to that.
Once the economy is strong again, we're beyond the pandemic, President Biden is likely to propose that we engage in long-term plans to address long-standing investment shortfalls in our economy. And these will make our economy more productive, raise wages, create good jobs. It is necessary to pay for them.
Let's take a look at what's happening on the markets next for you. Asian shares in the red again today. Fears rising over coronavirus cases in Europe. That's weighing on investors' minds. You can see sharp falls there across the Asian markets. The Hang Seng in Hong Kong down by almost 2% after that news. The city had suspended use of the Pfizer vaccine over concerns about packaging on a particular batch. That's worrying investors. On the currency markets, euros trading for $1.18 and 86 pence sterling as well.
Well, Stephen, fresh coronavirus restrictions in countries like France and Germany are worrying the tourism sector.
These are sectors that have missed out already on the February school holidays, a very important period for them, and now they're going to be missing out on the Easter break too. In Germany, hotels and holiday apartments will remain closed, but there's anger in the industry that Germans can still travel abroad for their holidays. Claire Rush has the story.
If you're German, a negative coronavirus test is all you need to board a plane to Mallorca. And after enjoying the sun and the sand, a negative test is all you'll need to return. No quarantine required upon arriving home either. Since Berlin eased travel restrictions last week, thousands of Germans have flocked to the Spanish island, a situation described by Germany's domestic tourism industry as unfair, because even as some international flights have resumed, hotels and apartment rentals in the country remain shuttered.
So it's okay to fly to Mallorca if you've been tested, but you can't stay in a holiday rental in Bavaria or elsewhere in Germany, even with a test? What's going on right now is simply incomprehensible.
Tourism professionals have staged protests following Berlin's extension of restrictions.
Last year, we proved that we can provide safe and secure travel. Hotels, airlines and bus operators within Germany proved that. We have to be allowed to do our job. We can do it.
Some representatives of Germany's aviation industry, however, argue that even small steps to allowing foreign travel are a plus. Two tourism groups, including Aviation Association BDL, estimate that further restricting international travel could cost jobs for more than 2,000 tour operators and 10,000 travel agencies. In the meantime, at home, Germany will extend lockdown measures until mid-April as the country grapples with a third wave of infections.
Well, finally, from you, GameStop is back in the news today after its stock market roller coaster earlier this year.
That's right, and it's nothing to do with those share movements that we're talking about the company today. Of course, it had hit the headlines when a group of investors organised on the website Reddit to pour their money into the company. The shares have been skyrocketing, raising many questions about the actual performance of the company. And we've learned more about that from their latest financial results. The company hadn't been doing well in recent years as they tried to switch more to online sales and away from bricks and mortar shops. Sales at GameStop fell slightly in the 3 months to the end of January. The company says that it's closed hundreds of stores in the past year, but didn't say a word about the stock trading frenzy. Investors are not so impressed with those financial results. Shares in the firm down by 6.5%. Still much higher than they were before all this started, though. But investors have some real data now to chew over.
OK, Stephen Carroll, the look through the day's top stories. Thank you very much.